a couple of weeks, I guess. But welcome to the first office hours of 2018. And as you can see up here, Jamie forgot to change his 7 to an 8, but we'll let him slide right now. We'll fix it next time. So just want to say welcome, everybody. Welcome to the first one of the new year. Steve and I've got some stuff in store for you today. But before we get to the good stuff, want to take just a moment to make the lawyers happy. So everything we present in these webinars is for educational purposes only. If you do need somebody to tell you when to buy, what to buy, when to sell, all that good stuff, please seek out a registered investment advisor or other licensed individual to help you out with that. All right, so before we get going here, for the regular attendees, bear with us for just 1 second. For the new people who might be here for the first time, want to take a brief moment to let you know, not only do we have the best scanning software on the market, but we built quite the vibrant community around that software. It all kind of starts off with Barry's trading room. He opens the trading room 30 minutes before the open every day. Barry Anderson is the moderator in there. He does a great job at showcasing his trades using the Trade Ideas technology and lots of other good stuff as well as keeping the room in order. So, you know, we're pushing 500-600 people a day in there thus far. And the best thing about the trading room, well, I can't say the best thing about it, but one of the really positive attributes about the trading room, it's free. You don't even have to be a Trade Ideas subscriber to get in there and check it out.
It's a good price.
Yeah, free is always a good price. Of course, on Mondays, it's myself and Steve with the office hours. And Steve takes the helm on Tuesdays for the trade of the week. And I'm sure he'll get into a little bit about the trade of the week at the beginning of this webinar as well. We like to switch it up, keep it entertaining. So that's why we bring in Dan, the CEO, and Brad, the CTO, on Wednesdays for the Q&A demo, always entertaining. Then our good buddy Andy rounds it out with his trading studio on Thursdays. I ride shotgun. And then on Fridays, we change it up a little bit. Been doing it for quite a while now. Seems to resonate with the users. It's just a 3-hour free-for-all, 11 a.m. to 2 p.m. Eastern, where you can come in and ask us anything Trade Ideas related. And you got myself and Andy and Steve, and one of the newest additions to the team, Sean, is in there as well. So always a good place to come and get new knowledge and get questions answered. All right, so keeping with tradition, we're going to pass it over to Steve and let him kind of size everything up with the indices and the type of market action that we have been having. And of course, Steve, today was a little bit different than what we've been seeing the previous week, and the constant up, and away. Threw a little bit of a curveball, of course, kind of finished in that spirit, but I guess it's a good time for me to pass the baton over.
Sure.
And here it comes.
All right. Let me clean off the desktop.
Yeah, get all your unicorn stuff off there.
Yeah, my pretty ponies. Okay. Hello, everybody. Welcome to my desktop. First and foremost, you might notice that my charts look a little different. Save that thought, because I will come back to it. But let's start off in the fashion of market recap. Basically, we finished the year right about here on this 1229 red candle, and then as 2018 came out, all the new money had to go to work, and it was a wonderful 5-day explosion of gap up green candles extravaganza. Kind of across the board, you know, spiders looking great, diamonds looked pretty good, and the Qs as well. Then we have our little friendly IWM, the Russell 2000, who's been lagging. We'll come back to that. Spiders, S&P 500 for the most part, you know, has been trending very nicely and is really in the high end of what you would call a channel. The low end of the channel being the trend line, and the high end of the channel, you know, kind of where the stock prices or the index prices start to peter out and pull back into the channel. I don't have a channel bar necessarily drawn here, but what we have coming into this week was last week's New Year's week of just getting shot out of a cannon as far as the indexes go. So I'm thinking it's probably time for a little bit of a pullback, maybe a little bit of a rest, a little bit of a breather in the spiders and the diamonds and the Qs as well. However, if anybody was paying attention to the trade of the week email that came through this morning, it is actually the IWM ETF. The idea being is that this sector is lagging the others tremendously, and the footprints in the sand here are just showing us kind of a cup and handle and a handle within a cup and handle, just looking for a reason to break out of these all-time highs here about 155.44. So the trade of the week today on a daily candle, I like the way it pierced the moving averages, which we'll get to in a second, and popped right back up. The intraday was a nice selling on the open as usual, and then buying back for the rest of the day. There's really nothing wrong with that. It shows up as these nice bottoming candles and hammer candles on the daily chart. So again, I'll talk a lot more about it tomorrow, and we'll have tomorrow's data of trading to look for as well. But I would not be surprised to see this blue line triggered in tomorrow's trading action, as the markets are not pulling back. They're just kind of going sideways today. We've got the Russell 2000 IWM playing catch up, and so that blue line is actually a price alert that will trigger the trade of the week if we're able to get that off. So, going into the week, going into the weekend, I should say, looking for a trade of the week, it was a tough call. The market is overbought with a capital O, and so we need to be real careful about, what kind of entries we're looking for. We're never going to be the ones to come in here and say, hey, 5 green candles, go ahead and buy the 6th green candle. That's just really inviting a nice 2 or 3 day pullback to stop you out. So how do you change symbols on the charts? I normally don't look over real quickly, but Steve and I will. It's very simple. I'm just highlighting the chart, and then I just type. I just start typing. There's nothing more simple than just typing in, what we're looking for. So with that said, the IWM is it's safely above its moving averages here, which I really like, and it's beating up against this level, looking for a crack in the ceiling, and for a reason. And if you think about it, guys, the money managers out there who have been putting money to work the last week, in the beginning of the new year, it's probably not going to be long before the baton of rotation looks backward and says, hey, it's time to bootstrap these Russell 2000s. And I still fully feel like we may get a trigger in the IWM, which is the trade of the week for this week. That swing trade rode into the weekend. Oh, good question. I think Andy's gonna. Yeah, I think Jamie's gonna talk about that one. I believe, David, you're talking about MYSZ. We'll get to that. That was a interesting Holly chart that was thrown up.
My size, yeah.
Yeah, so we'll get to that. The last thing I want to talk about is, the new charts. A lot of guys are looking at these charts saying, hey, I'm kind of liking the way Steve's charts look a little better than mine. So in the next few days, not weeks, but days, there's going to be a new beta version after we have worked on the production version here, and that new version is going to include the new charts. What are the new trade ideas charts going to be comprised of? Well, a couple things. For one, the volume was always kind of a problem. People didn't like the way the volume had no contrast and was very shadowy and bled into the background. Well, now we have our own compartment down here for volume. Most importantly, we have the ability to not only add SMAs, simple moving averages, which I have done on my daily chart, but have not done on my intraday chart. Or we can also add exponential moving averages, and I think a lot of people will be happy because some people really get caught up in whether they're an SMA crowd or an EMA crowd. We're going to give you the ability to use both. And so just a real snapshot on the new charts, a nice new window for volume and average volume and moving averages. And let's just take a look real quickly here to give you a quick idea. Indicators is going to be the place we start. And here we are. We have average volume, which is that line going across the bottom of my volume bars. We have exponential moving averages that we could create. And we have RSI, which we can also create. And that will be down here in another subcategory near the volume. So RSI is also going to be available, simple moving averages, which I am demonstrating, and then volume. Well, if I want to go in and use this modify indicator parameters, So right now, if I go into this, this is showing me everything that I do have open. I've got volume down here at the bottom. I've got average volume. I've got my 50-day SMA, and the color is blue. I've got my 10-day SMA, and the color is green. And I've got the 20-day SMA, which the color is red. So I've always used the 10, 20, and 50 SMAs, and it's giving me a little bit more color now that I can start to kind of share with you guys going forward as we look at different charts. So going forward, hopefully when you guys see the new beta version released and the new charts are out, you're going to be able to have this type of configuration with these snappy volume bars, and you can custom tailor. You can do whatever. If I go back here, modify current indicators. If I want a 22 period, I can make a 22 period. You're no longer really going to be relegated to what we have in our library of static filters and ideas. So with the chart configurations, you guys are going to be able to add your own time frames, whether EMA or SMA.
Right, and Steve, just to answer Suresh's question there, it's not like currently if you want an Ikimochu cloud, there's no way to create that, right? It's still the basic things.
These are our choices. These are our choices: EMAs, RSI, simple moving averages, volume, and average volume. In the next releases down the road, will there be more? I don't know. I'm not part of that department. But for now, I am definitely happy with the changes that I've seen, the improvements that I've seen in the charts. They're much more snappy, and I do enjoy my moving averages fanned out, as I call them, stacked, the 10 above the 20 above the 50, which of course the IWM is showing us here. Lovely the way it tested it today. It tested that 10-day moving average and bounced right off of it like a trampoline, heading right back up towards that ceiling. All things look go for IWM. You know, it may just been a day early today, but I won't be surprised if we get a nice trigger tomorrow. But again, the charts will be available in the new beta release as soon as we have that. Can the EMAs be referred to for auto trading? I believe they. It's a good question, Ganesh.
It is.
Because the auto trading is still predicated off of our filters and our events. You know, you're welcome to email info@trade-ideas.com and say, hey guys, I noticed you got some new charts with EMAs. Any plans to be able to use EMAs in our auto trading? Because I honestly don't have the answer for you. Ganesh, I apologize. All right, so the path of least resistance continues to remain up in the bigger picture. I would not be surprised, however, if we maybe see a little pullback. And these moving averages that I like to look at, the 10 period right there is coming up underneath. We may have a nice pullback and shoot through that and then pop right up and close at that moving average. That's always a scenario. If that happens, it would be very interesting to see what do the Qs look like. Same thing, the Qs, all of these Qs, diamonds, and S&P could easily have a pullback back to what I call the fast line 10 period moving average, the fastest of the three averages that I use. So kind of in chase land up here, looking for a little bit of blow off and a little bit of breathers and some pullbacks, and maybe they'll make room for some of the other charts that are out there that have been consolidating and haven't been running, like things like steel having a great run, and some other stocks like Caterpillar and infrastructure type stocks. There are stocks that are out there that are going to have pullbacks and have setups, but for the time being, the backdrop of the market is a bit overbought, and I wouldn't be looking to really get heavily chasing up here. I'd be looking for more of a pitch, the right pitch and the right setup. All right, so with that said, I'll hand it back to you, Jamie.
Good stuff, Steve. I like the new chart toys. It's been coming for a long time, and hopefully we'll continue to add studies to those charts, just like we'll continue to add filters and whatnot. All right, so hopefully you've got eyes back on my screen, yes?
Oh, yes.
Okay. All right. So let's get on to the rest of the stuff, ladies and gentlemen. You know, we usually like to go over Holly's action, and you know, today I can't say it's almost a non-event, but you know what we want to do is focus on Holly's PNL chart for the day. Now on risk off, you know, we get green for a little bit, briefly, snap back down, but of course, risk on pretty much tells the tale of the day. You know, once again, if we just kind of refer to the SPY here, looking at 15-minute candles, I mean, we've expended a lot of energy getting up to this point. Everybody was just used to seeing the gap up in the green and, you know, assess whatever reasons we thought the market was going up. whether it was a conducive business environment or a lot of other things going on right now. But guess what? Everything comes to an end at some point on the short term. Stocks got to take a breather. Markets in general also have to take a breather. So this risk on right here, as Steve and I were discussing earlier, pretty much looks like a earthquake, reading. I mean, we get up, we snap all the way back down, go below, we get up again, we go below again. And of course, these are statistically viable plays that we're doing this. And not only did we see this type of action in Holly today, but a lot of the tickers that myself and Andy and Steve like to watch on a daily basis for some real high quality plays with volume, hey, there was a lot of high volume today. But as far as quality setups, they were kind of few and far between. So, everybody was probably geared up for the same type of action. But on days like today, we have to be very selective. I took a little clip from one of the guys I like to follow on Twitter, Peter Brandt, who has been a trader for 40 plus years. He's more of a commodities and futures guy, but I really like this quote. Are you willing not to trade for weeks, waiting for a trade in your sweet spot? Patience pays the bills. Forced trading creates the ills. And of course, we adjust this to our time frame because we're equity traders and we like for, everything starts as a day trade, but we still have to be very patient for the proper setups. And the moment that we start chasing or not abiding by our rule set, we all know where that leads us, to a very unsafe mental space. And so today was the perfect example of being patient. So I tell you what, let's not jump into that just yet. Let's go ahead and talk about Holly. All right. Let me get my thing over here. Bear with me. I'm still on a travel machine. I hope to be back in sunny San Diego soon enough. But hopefully, most of you out there didn't suffer the same fate as even myself and Steve and even the crew in sunny San Diego. It seems like a sickness got everybody this year, whether it was the flu or something else. I was in Texas, so it was something else. But making a comeback. If my voice goes out, you know what happened. And if I have a coughing fit, I'll try to meet the button here before I do that.
Okay.
All right, so with Holly, we can see risk on after the day was completed on a total of 2, 4, 6, 8, and 9 trades, holding everything into the close. And of course, this doesn't include slippage, about 40 cents. So not the greatest day, not the worst day either, but a lot of noise in between, all right? And when we take a peek at Holly's blotter, usually we have a couple of examples where Holly gets out from a time stop or, reduced risk or profit save. And then the stock continues to go higher or lower if it's a short. And we can see some nice disparity between risk off and risk on. Now today, not a whole lot. We got a couple up here at the top of the list. CRCC, Holly takes 20 cents on risk off mode. So let's just go ahead and take a peek at when she signaled that trade. And we'll just go ahead and shrink this down to 5-minute bars to get a little bit more detail here. Okay, so CRCC, there was a little bit of meat left on the bone on risk on, but not that much. Difference between 20 and 32 cents, 12 cents. And of course, Holly's entry here. And, when we decide to go risk on, it's when we see Holly exiting the trade. For whatever reason, she time stopped out on this one. Of course, if we look at the strategy that issued the trade looking for the bounce, designed as many of these strategies are around a 60-minute hold time. Holly timed out, and of course, the thing continued to move higher. Now, of course, this has not changed with the new charts. Of course, I haven't had the time to get as many studies on mine right now as Steve has on his. But we can see here, this is Holly exiting the trade. This is her risk off time spent with that timed hold right here. So, typically we like to see a much more conducive chart pattern. I'd like to see a lot tighter range here if I was going to take extra risk and try to stay in that trade to milk a little bit more. Now, even though the chart is a little sloppy and stretched out here, we still did get a little bit more of a push immediately after. But hey, if you weren't quick and if you weren't managing your stops properly, you would have had a nice elevator down here, which would not have been a whole lot of fun. And this is indicative of a lot of trades today. See a good entry, you get a little bit, but if you weren't taking those profits before you knew it, it was right back down to your entry point and maybe even going into the negative regions today. So the only other one to kind of point out off of today's blotter was SQM here. And Holly flats the trade. Technically, it was a profit save right here. We can see the little sliver of the shaded area here. And when she gets out for this little chunk of change, and of course, very similar to the other one. Initially, a nice little pop, and then a regression right back down. So, when we see Holly engaging in this type of P&L fluctuation, once again, Holly can produce high quality signals. Sometimes she's right on the ball and identifies that up or down bias, and we roll with her. But on days like today, it's what we like to refer to as the canary in the coal mine. If this highly advanced statistical model is having issues today, having problems staying green, that tells us something, right? So if we're seeing Holly, go about this type of activity, and then we start watching our favorite tickers. Those of you who attend on the regulars know that myself and Andy, we like to watch the high volume plays and then find the chart patterns that are matching with the high volume, because from a simplistic standpoint, there's gas in the tank. We know that if we hop in and take that trade, push on the gas, do a burnout and take off like a bat out of hell, we're not just going to stop after we get a block down the street because there's no gas in the tank. Of course, it's not a guarantee, but hey, you want to have potential energy backing your trade, and that's typically what volume is. And we'll get into some of those tickers today because there were tons and tons of stocks doing volume today, but there wasn't a whole lot of quality setups, right, to be had, simply because of the way the market opened. A lot of stocks ran up right off the bat and backed off, a lot of stretched out charts. But of course, there's always one, two, or three out of the 50 or so that you had to scan through that were pretty conducive. And we'll look at a couple of those as well. But before we move on to that, I want to take a moment to talk about a trade that was generated from Holly on Friday. And that was this stock here. And it's a very good point to make about a question that myself, Steve, everybody on the support crew here at Trade Ideas gets, and we've been getting it since day one and we'll continue to get it. But, well, I should say the question is, well, it looks like Holly is only good for intraday trading. What about swing trading? Well, take a look at Friday here. MYSZ was triggered. Let's just go ahead and look at it on the intraday first. Very nice buy signal here on MYSZ on Friday as it's coming out of this little consolidation on the intraday. We can see right here a nice buy signal and a nice winning trade. Now, when we also look at the daily, what had been going on with that chart? Wow. This looks very similar to the trend change lubricants that we like to showcase from time to time. Stocks that have been really beaten down, but guess what? The tide is turning. They're breaking some
stock basically came to life on Friday. It's just no way.
It did. Yeah. It did. It came to life on the chart, and it really came to life on the volume. And so, once again, what makes a good swing trade? Well, we have to consult the daily and figure out, well, is it breaking out? Is it going to bump its head soon? Do I feel comfortable taking this thing home? And especially if you're a person that was in whatever your tier limit is here, could be 500, 300, 200, 100. But getting into sync with Holly on a risk off and risk on basis, I always like to say it's better approaching risk off and risk on a trade by trade basis, because it is the chart on the intraday and compiling that with the daily that's going to tell us when we see Holly getting out of the trade, it's going to help us decide, well, do I want to get out with her? Or do I think there's a little bit more meat on the bone here? So a good habit to get into always until you really get the hang of it is to do a little bit of both. Peel out a half, keep the other half, tighten that stop up. That way you're guaranteeing profit on that trade. Even if the second half doesn't give more and rolls back and flips and you get stopped out for a break even, you made money on the first half. And then the bonus comes when you can target things like this, when you're like, okay. And what's nice about this too is we can always fold in what we like to call the fractal pattern. So when Holly called this one, and let me just scroll down here and expand a little bit so you guys don't have to squint to see this. And by the way, a user was asking earlier, how do I compress and shrink the charts? Well, I'm just scrolling back and forth with my mouse wheel currently, but if I hold my control key down, now we can compress and expand and make those bars bigger and easier to read. So what I really liked about MYSZ on Friday was the fact that it was also coinciding with a nice range break on the intraday, right? Nice crisp break, nice low risk area, and volume coinciding with this break. We get a nice move. What do we notice over here? Well, it's pretty much the
Breakout.
same pattern. A breakout is being exhibited on the daily. Holly and the pattern for confirmation get us in with a nice warm fuzzy feeling, and then we notice the same pattern is being exhibited on the daily. So that's a fractal confirmation. And one of my favorite old guys from history, Leonardo da Vinci, was a big believer in fractals and simplicity. And so when we can compile those things into a trade and they're as pretty as this, that's when you know, well, it's got a very good chance of doing what we think it's going to do, and the risk is low. So keep that in mind as you move forward, all of you premium subscribers. When Holly calls a trade, it's pretty much in your best interest whether you take time in the middle of the session to do this, or whether it's a post-market activity, which is what I like to do, and we go back and we look at all the Holly trades that were generated, we size up the dailies, and we make the call to keep close eyes on these guys. Or if you did make the decision to hold, obviously you got to make that decision before the market closes. So it's a very good habit to get into once the first 2.5 hours are passed and we get more or less into the doldrums of the day. And it's a very good way to productively fill that time void instead of sitting there trying to trade against the algos in the middle of the day.
Yeah, if you're going to think about swing trading some of these strategies, if you've got money under your belt, you'd be amazed at how much taking half off can help you leap to the next level of letting the back and forth and the patience kind of work on that second half chunk. But how do we find these? Well, Holly showed it to us, but it's up to us to do one of two things. Either maybe put a price alert in there if we're not involved in it. The first scenario of selling half assumes that you were in it and you took advantage of the move, keeping half. But what if you weren't in it? Maybe you wanted to not lose track of it. It was breaking out, and maybe there will be some follow-through opportunity. Well, either price alert or go ahead and use the new heart feature. You just click on the heart up there inside the chart, and that will heart that stock and drop that into your My Favorites, which is the heart symbol on the channel bar now. And so it'll keep track of all of the stocks that you've clicked on that heart button for a reason, because you don't want to lose track of them. Yeah, exactly. So that particular channel bar will take you to a top list of all the stocks that you have previously hearted, and you can keep an eye on them. But additionally, the price alerts also can be a good way to keep track of something that you saw, Holly, that looks good on the daily. You didn't participate in it, but you don't want to lose track of it. These are the things we want to try and keep track of, because they don't come along very often. And when they do come along, CNBC is not talking about them.
That is true. CNBC talks about 3 or 4 things every day. It's pretty much the same.
Will you show Chris again real quickly how we like a chart? It's just every chart.
How we like a chart, right? Okay.
Yeah, every chart has a heart button. So we'll go to this one, that empty
Say
heart.
I like FBR. I come up here, I just simply click on the heart, then you'll see it illuminate, and it'll be added to your My Like symbols. I'll click on this channel in a moment and flip over there and kind of give you an idea of how it's going to load when we're done with this.
How many favorite charts are there? Is there a limit to how many times we can heart a chart? Have you heard anything? It's a question.
I'm sure there is a limit. What that limit is right now, I take that back, because in the list functionality, right? If we just go to the old school list functionality,
the most we can have was.
I've never ran into a limit here, and I've got lists with thousands of stocks in here in the past. Let's
195.
see. Yeah, I think I called out some of my big ones. No,
I don't
actually,
think
right
there's.
here.
Oh wow, 700. Look at that one, and that's 3,000. Yeah, there's not going to be a limit. I'm pretty sure, Patty. It's unlimited. Yeah,
Yeah.
looks like it is unlimited. But it's a matter of you continuing to manage and uncheck and unheart those charts that fail and go back to lows, so you don't have to look at those again.
Yeah, so unless you're going to put more than 32 or 4,000 symbols in there, I don't think you have to worry about a limit right now.
Very good.
All right. Okay. So let's kind of circle back around and talk about what I was referencing earlier. You know, what did I see? And see, these are correlations that if we notice Holly having a hard time, right? And then the market kind of starting off, ooh, everybody was like, oh my gosh, even though it was a 9-cent gap down on the SPYs, we're used to seeing nothing but green and darker green on these indice panels here for the past 5 trading days. So we start off with a little pink, right? And of course, the market did decide, or the overall market, the SPY, did decide to go and trade higher than where we closed on Friday, but not as much momentum, all right, as we typically had. So when I was scanning my favorite high volume windows, which are typically, I like to target the ones where they're out to all-time highs and then target a nice simple range break pattern on the intraday. Man, there were a lot of things coming through this guy today. And, you know, if I just kind of, it's on real time right now, but let me just divulge the history here. And if I just kind of leisurely scroll back once this guy loads up here, taking a sweet time, and I'm getting a not responding sign right there. Don't know what that's all about. Well, and my window turned white, Steve. I don't know what that means, but it seems like it died. And tell you
Nope, there
what,
we go.
well,
Nope.
the nice thing about the technology is if that happens, we'll just quickly retrieve the window and try it one more time. Yeah, I don't know what the experiencing a little bit lagginess here, but give it one more whirl here. Okay, looks like it's doing its job this time. Well,
Still loading.
yeah. Okay, finally.
There we go.
All right, so we can see tons and tons of symbols coming through here. Let's just get on down to about, let's go about 45 minutes into the open. And of course, I'm still on Pacific time here. And we can see we're on the right day here. So a lot of these things, if we look through these charts here today, when we're getting signals 45 minutes in, even most of them an hour into the market, we're seeing things at tops because a lot of things ran up like this off the open. So had to be very, very patient today. FTech, a nice little range break here, but not near as pretty as I like to see them. Matter of fact, after it was all said and done, there were probably only about 5 of these that lined up perfectly today, the way you like to see them, with the nice tight ranges, low risk, and you know there were probably, I don't know, over 100 symbols that came through, and only having 3 to 5 of them line up, you know, that coincides with what we saw Holly divulging to us early on in the day with this schizophrenic, I'm positive, I'm negative, I'm positive, I'm negative, I'm positive, negative, so forth and so on. You know, when we see action like this, it's basically telling us, you know, you're about to ski down a double black diamond mountain. So if you're not extremely proficient, instead of having a nice time, you're probably going to get hurt, right? So going back to the little clip that I wanted to point out earlier, and by the way, if you're technical, you know, if you really want to sharpen up your charting skills, follow Peter Brandt on Twitter, because it all translates, whether it's equities or commodities or futures. But patience pays the bills and forced trading creates the ills. And I think everybody's been in that boat before where you're chasing. And as soon as you buy something, You might get in the money 5 or 10 cents, but before you know it, boom, you're down 20 cents, and it's back down to the line where you should have been long in the first place, right? But you're having a hard time finding things, and you're like, well, this one still might go, and then before you know it, your mental capacities are pretty shot, and at that point in time, you're not good to anybody. So, patience really plays, especially on today's like today. So out of the big caps, and of course, when I say the big caps, this multi-strategy window here, I've got 3 versions of the same strategy. Any equity above 4 billion market cap, between 2 and 4, and then the sub 2 billion category. So, of course, the big boys have been leading the market. One of the only plays I saw set up nicely today was ANET, but it wasn't until later in the day, right about here. And you can see, boom, 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 run up. Most of the steam, most of the fuel was used here. Now, we do have a nice breakout occurring on the daily as well. Once again, a good example of the fractal pattern. But intraday is key. We have to make a nice cozy entry. And of course, once most of the steam is out of it here and we get the signal here with a new high, what do? We hug the line a little bit and then get a little bit of a lift throughout the rest of the day. Now, whether we participate in this and have the patience to sit through this, because first and foremost, the risk was in place. It wouldn't have stopped you out if you're using like a 15-minute look back. And we're looking at 5-minute candles here. So what do I mean by that, a 15-minute look back? Well, here's where we had the penetration right here, not including the entry bar. We just look back 15 minutes and take the lower point of the prior 15 minutes. So if we're making this trade, this is our risk area here. We hug the line, just like we do on some Holly trades. And then we push, take a drawback, and then push higher on the day. Now, let's use the example of chasing again on a day like today. Let's say we don't get it through here, and we see it coming through here, and we're like, oh, well, that's still the same setup. Even though this was the first tier, I'm going to go ahead and take a poke at it here. Well, what happens? We get in the money a little bit, and then we roll back over again. Where the real entry was here, the first occurrence, right? And, that phrase right there, first occurrence, it's very important, and it comes around a lot in these training sessions that myself and Steve and Andy do, whether it's back testing or manually finding a trade setup with one of your windows that you created. First occurrence is key. Second occurrences work sometimes, third occurrences work, but you have to have a lot of momentum for those second and third occurrences to be fruitful, right? Second and third entries, adding to a winning position. Once again, one of the harder things for a newer trader to pick up on. But once again, this trade right here, even though it was very strong for the day, once the steam is gone, even though we have a nice conducive pattern, it's still a tricky business. So,
hey, I'm curious before you change that. One of the things I'm noticing now that we've got some moving averages, Jamie has placed the 10-period moving average in his 5-minute intraday chart. So when you have a stock that's moving very well ahead of its moving average, as it did in the first couple hours there, look at right about the T on the NET. Look at what happens. The price action dies, and then it waits for the moving average to catch up, and it can be an interesting inflection point in the intraday charts where the moving average coming up from underneath comes up and kind of forces the hand of the price. Now, I don't know what we're going to see here because I haven't looked yet, but can you switch to a 15-minute chart? I just wonder if it's doing the same kind of a look on a 15-minute chart. Maybe it isn't. I don't know. Hey, how about that? Look at that. Look at what happened. This price action started going sideways, and there's that one little green candle that ticked that blue line, and they said, whoop, we better get going again. So moving averages can start to come into play a little bit. We'll talk a little bit more about them going forward. We're not going to try too technical, outside of the trade ideas technology. But when we're looking at charts and we're talking about human and machine, man and machine working together, sometimes we have decisions that we have to make. And a lot of times when I see the price action get way ahead of itself, it's interesting to see what happens when that intraday, or even on the daily, it's the same thing, where that fast period moving average catches up to it. Nobody really wants to be the last one sticking around, and so they start buying more as that average approaches on a strong setup. So I was curious. It looks decent on the 5 and the 15 using a 10-period SMA middle of the day. Kind of shows you where the inflection points are, where the moving average starts to force the hand of the price.
Yep, good observation. All right, so that was one of the big boys. One of the other ones today was SPR, right about this level right here. Of course, I had marked my charts up since I had to restart. That was all for naught. And once again, on this entry point right here, once again, we got a nice little snuggling up on that 10-day, right? This one was a little bit more resilient. Entry bar here, 15-minute look back gives us a nice little cozy risk area right here, and a nice little continuation. This one even had a little bit more spunk to it for a second entry, but not a whole lot.
Let me know when you're ready to look at something else.
Yeah, and of course, once again, what do we have going on in the daily? Where's it going to bump its head? Nobody knows. I mean, this little guy's been on quite the tear ever since it got out of these levels right here. Man, I'm getting some lagginess on my chart here. It's probably due to the fact that I'm on a less powerful computer right now. So what do you got, Steve? What
Perfect. This is perfect. Go ahead and let's go to the daily chart and type in X.
Oh, good old X.
Good old X. But here's what you can't see. Let's go ahead and add a moving average, Jamie. Right click, SMA. Boom. SMA, let's make it a 10 period. So where are we doing that?
Let's see. We insert here, correct? That's the name, right?
Where's the period?
I know.
I guess that would be it. I guess you type in there, right? 10.
Correct.
Let's see if that worked. No, we didn't do something right.
Nope. And see, I'm a version behind because of my travel schedule right now. So
go ahead and try indicators again and SMA.
Modify SMA indicator.
No. You did it wrong. I see what you did. Go back.
Okay.
Right click. Indicators, SMA. Up.
All right.
Up. No, you keep going to modify. You have nothing to modify yet. You got to go SMA first. Indicators, SMA. 3. There you go.
There we go.
Okay. Period. Perfect. So SMA period, we should be able to type in 10 in there, correct?
You're talking about right here, right? I was just doing this the other day, but I'm drawing a blank right now.
Okay, so let's go ahead and just add it. Then I guess we can adjust the period. So just go ahead and add it. Click OK.
Right. See, that's what I was going to do.
Yeah.
Okay, so we added it right here already, right? Okay. And now we want to go back and modify it, right?
Well, click OK.
Am I doing something wrong here?
I don't know. I'm confused. See, this is why it's still in the developer's version. Let's go to modify indicators, I suppose. Let's see if there's anything in there yet.
Okay. See, it's 200 right now. Okay, what did you want?
I want to go 10.
Okay.
Okay,
so
maybe
10 here.
Yeah, change the color to something bright. That's fine, green. Maybe a darker green.
Okay. How about that green right there?
Okay, and let's hope that we get it. Because what I'm trying to demonstrate here, guys, was the fractal nature. There we go. The fractal nature of what happens when price gets the moving average caught up to it. Look at what happened about 5 days ago there. Sideways, sideways, sideways. And here comes the moving average forcing the hand. And then we had a nice, real nice pop last week coming out of that moving average.
Yeah.
Anyway.
Good stuff. Good stuff.
All right. Let's grab a couple questions here real quick and see.
Yeah, sure. And hold on, let me get my questions panel. Managing a small layout after you're used to like mega space is very difficult. Okay.
Chris Esty is asking about, is there like a setup where the price breaks the 20 period and then above the 50 period shortly thereafter? Is there a scan for something like this? What the reason I'm reading it out loud, Chris, is what you can do, and anybody that has a suggestion of how can I do this, you really need to send it to info@trade-ideas.com, and it'll get forwarded to one of our expert users, and we will try and come up with some sort of a foundational plan for you, and send you back a cloud code, which is basically a starting point for you. But I think we can certainly help you there. Let's see, is there a pattern recognition alert? The pattern recognition alerts that we have work well intraday, like on 5 and 15-minute charts. So I think that's what you're asking about, Arthur. Maybe real quick, if you do a right-click configure on any alert there.
Because you're right. I mean, there's a gazillion ways to find
Go to the
consolidations,
category.
right?
Well, let's see. He was asking for pattern recognition. So if you go up to that drop-down menu under category, there might be geometric patterns. Would be a list
for the triangle, yeah.
Yeah, geometric patterns and things would be something that might be interesting to you, but you'll notice those are all in hours of trading. So that might be where you want to explore. There's also some candle configurations like dark clouds and hammer candles and things like that you can also go into and look at in the intraday is much, much better. Okay, I'm just trying to clean up the last of our questions here. Let's see.
While you're scanning that, I'll answer David's question. You're right, David. And as I was telling Steve right before we were about to launch the webinar, you know, I'm sitting here, I'm traveling, I'm in small town Texas. 5 minutes before the open, everything goes dark. So I lost my internet connection 5 minutes before the open. Took me about 20 minutes to get back up, so I didn't have everything running on the open. Believe me, I was pretty pissed off that I couldn't tweet out my compare count readings this morning, because for those of you in the know, that can be a very powerful indicator. So yes, technical difficulties got me today.
Sometimes that happens.
It does, it does.
Well, I think we knocked out most of the questions there. Pattern recognition, which number do you, the number that you would put in, Jill, would be how many hours you want to go back and scan. So if you had to maybe scan, you know, a 15-minute chart going back a day or two, you know, you could put in like 12 or 14 hours. That's the qualification for those.
It's how long that pattern took to develop.
The hours of data the software is available, you know, is I believe 2 hours of pre-market, and then all of the regular session, and then I'm not quite sure how far we go into the after post-market session. I know they've done some recent changes, opening up even more time for people to get up even earlier in the pre-market. I think our systems may miss a half an hour there or so, but that's just the way it is.
Right. I'm pretty sure it's still 2 hours pre and post, right?
Yeah, that's
they've talked about adding to that, but you know, that's quite a monumental undertaking, which leads me to a good point. If we're caught up on questions, Steve, are we?
Well, that would be Jill. That would be max, the maximum that number you put in there, that qualifier. That would be the maximum number of hours that Trade Ideas would go back and look for. Is that right, Andy? I'm saying Andy, Jamie.
Yes. You can call me Andy. You can call me Jamie. And of course, it's, you know, I think the question was also about consolidations. So if we went and found the consolidation alert, we can see everyone's going to have a different metric here. So in this case, it would be, okay, if a consolidation is triggering and it's showing a 2, that's going to be the least quality.
Pretty sloppy.
If it's coming out at 10, you're going to be like, oh, you know, you don't have to stand across the room and squint your eyes to go, oh, yes, that is a consolidation, right? So 2's the worst quality, 10's the highest, and then so 9s, 8s, and 7s probably be what you want to focus on if you're using this alert.
Exactly. Just user preference as to how sloppy or how tight you want to see those consolidations using those qualitative values.
So Suresh, yes, scans typically, the majority of alerts and filters function in the regular market hours. Some function pre-market and post-market.
Do you have a top list up there? I was going to show
Do I have a top list?
Yeah, do you have a top list somewhere? I'm just going to show them to make sure for aftermarket hours, when you're going to look at a top list of something, when you right-click and go to time frame, make sure that you are on live always, because live during market hours is only going to give you data, you know, for the market. Live always is a better way for end of day type scans. It's going to
Yeah,
give you the last print exactly.
right. So, Steve, you reminded me of something when you brought up the, the pre and post market, and that is, and this is not going to be available like tomorrow or the next day, ladies and gents. But what's going on behind the scenes right now is our engineers are and coders are putting together a brand new cluster of servers that will run 24/7.
Why would
Now,
they want to run 24/7, Jamie?
well, let me tell you, it's not for the equity markets. It's going to be for futures and, drum roll please,
Say it.
cryptocurrencies. Of course, it's hard to even avoid hearing about the crypto rage that's going on right now, and it's not a fad. It's a burgeoning industry, right? It's just in a crazy mode right now, and guess what? Those things trade 24/7, just like a futures or commodities that do that type of stuff. So
We're laying
we're
the groundwork to try and figure out the best way to approach it.
Yep. And once we get those servers up and running and tested, we'll be plugging in the most popular crypto exchanges, so that you can, apply everything that you see here to the crypto world. It's going to usher in a whole new world of things to trade. I'm not going to go into too much detail right now, but we will be adding the most liquid exchanges, things like Coinbase, GDAX, maybe something like Binance. So basically, there's hundreds of very liquid cryptocurrencies out there right now, and can't really say it's going to stay like this forever. But right now, what's the allure of trading those things? Well, when we get a big mover that moves 20% in the day in the equity world, it's like, oh, were you in it? Was it great? How much did you make? Well, ladies and gentlemen, moves like that are happening every single day, multiple times in the crypto space. All right, it's only going to get bigger as time progresses. So, just wanted to kind of throw a little carrot out there and let you guys know that we don't rest on our laurels here. We're constantly improving, and we've been examining this space for a very long time. So, it is coming. It's probably going to be very interesting and open up a whole new realm for people that maybe don't necessarily have lots and lots of money to open up a $30,000 account and not be subject to the pattern day trading rules of the U.S. equity markets. So a lot of good things coming down the hopper. Hopefully this will be implemented. Well, I've been told by the end of Q1, which puts us at the end of
So we're
March.
talking a few months. We're talking a few months probably.
Mm-hmm. Yes.
All right. So Jamie, before we hang up, you did a request for the volume radar. If you could drop that code in there for Matt.
Yeah, he wants the volume radar.
Yeah.
No problem.
Then as soon as we do that, we're at the top of the hour. We'll bring in Scott, and I'll answer this last question here.
Sure. All right, volume radar cloud link has been dropped.
Mm-hmm.
And if we're at the top of the hour, I guess it's time for your time in the spotlight, Mr. Scott.
All right. Well, thank you for the great presentation. Thanks for the first webinar of the year. We've got some items to talk about on the way out. First of all, I think all of you know that we have a podcast. Oh, Brokerage Plus. Yes, if you're an interactive brokerage client, you can be managing your stuff via trade ideas into automated trading using strategies, all that kind of good stuff. If you have any questions about getting your interactive brokerage account going with this, email info@trade-ideas.com. It's available now not only in the beta, but in the standard release of Trade Ideas, but we're not charging for it yet. It's a beta. You do need premium Trade Ideas and an interactive brokerage account to try it out. So if you meet both those criteria, just shoot us an email, find out about it. I hope you're all subscribed to the podcast. Just search for Trade Ideas Podcast on whatever application you use to listen to it. We're going to have the first one of the year up this Friday. We should have a guest host. I need to reconfirm with him, but it should be Chris Reed from Ascend Trading. He was a very popular guest the last time we had him on, so it should be a great podcast. If there's any changes, though, we'll let you know. But do subscribe. We put out new ones every week. We had a whole bunch of them out last year, 40 something, and looking to have as many as we can out this year. Hopefully 50 or so. We have a code, but before the code, we do have an announcement. We're increasing our prices during the first quarter this year. So around February 15th, we're going to change them. Don't worry, your current rates remain unchanged. We grandfather in the rates, so everyone that's currently got an active subscription, you stay where you are. But the rates are going to increase around 20% across the board. So do take advantage of getting your subscription set now before we do the price increase in February. And just maintain your subscription. And that way you will maintain the great rate that we're currently at. But we're going up because we are adding new features. Our AI is kicking butt, and our software is the best out there. So, it's something that is overdue, and we're giving you plenty of advance notice. So take advantage of the discount codes we're giving out now and anything that will be coming out in the next few weeks. Stay tuned for announcements and all that good stuff. We do have a discount code. Speaking of which, you can also download this from your handouts panel. Go to the handouts panel on your GoToWebinar interface. Just expand it. Click on download. Download that PDF. It's got this slide, the previous slide, some other information. Use the code new goals, all caps, just like you see it on the screen, and that saves 15% off your first month or year of trade ideas, either annual or monthly, or you can use it to upgrade your first installment of your upgraded plan. You can save 15% on that too. Thanks everyone for attending the first webinar of the year. Thank you, Jamie and Steve. And if you want to contact us, our email address is info@trade-ideas.com, or you can email them directly. Follow us on Twitter and Facebook and all the other usual places. Thank you, Steve and Jamie.
Thanks, everybody, for popping in.
All right, thank you.
Have a good one, everyone. Bye.